Hi there, welcome to the session that helps you avoid FOMO and panic. And in this session, we'll cover Hedera, Casper, and XDC. Okay, the real-world assets, crypto. As usual, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. Remember, the dashboards, including a macro market dashboard and the crypto dashboard, is now available on Substack at SLS for free at the moment. Go check it out. Very first thing, Hedera. It is in the, I'll say, just past the early stage of accumulation, getting into this testing range where the whales are going to shake out as much paper hands as they can. And by looking at the 2022 to 2024 accumulation cycle, we can see that it has entered, the price has entered the top of the accumulation range back then. Okay, it is currently between the 0.077 blue key level and the 0.089 purple key level. This week is the third week that we see the bulls try to go past the purple key level, but failed. You see these long wicks selling from above. And this week's volume is significantly higher than the previous 5 weeks. That means there's a little bit of bigger commitment from the bears. We already know how deep the test can go. That shouldn't surprise anybody because that's what happened in the beginning of February, that the price went below the blue key level of 0.007. We're still looking forward to see sustained price climb to re-challenge the yellow key level of 0.192. But that's not the end of accumulation, because a lot of times after that kind of rally, if the accumulation cycle isn't over yet, the whales can push the price back to the lower levels before they let the price shoot up to the next distribution peak. If you ask, how do we decide a test or a lens that I use, is that whether there are sufficient good news lining up at least for a few weeks. Okay, why a few weeks? You see the price surge over here from the initial climb, the very short candle over here, the breakout candle 3, 4, 5, only 5 candles, 5 weeks over here. That's already sufficient to lead to the FOMO top. So imagine if you need 2 to 3 weeks to start to build up, getting the positivity in the people, turning them from negative or hesitant into ready to get excited mode. And then the next 5 weeks, that's when the news pushing them to jump in. Okay, that's why probably around 7 to 8 weeks of news lining up, that's sufficient to get the fire going. So that's how I assess the situation. But looking at the world now, it seems like there are, more weeks of bad news coming out than good news. So that's a completely different story, right? Now, get to the micro view of Hedera. Last week, we talked about this mini trend, this mini downtrend. Okay, there are 2 mini downtrend channel I've drawn. One is this yellow, the other is the light blue. Okay, why do we have 2? Because if we just take these 2 references and then using this wick from March 31st at this point, we get the yellow channel. Okay, but if we look at these 2 and then this one and this one, we get the light blue. I'm sorry, here instead of the wick. Okay, we get the light blue in that case. So the bottom, basically, the ceiling and the bottom is different, and the rate of decline is different. It happens sometimes because during these kind of downtrend, some people would like to include the wicks as well, because that's how deep things can get to. It isn't wrong. I'm drawing both because the situation is still developing. When we get the next confirmation, like because the news that came out a few hours back, the negotiation between the US and Iran is over, and that Donald Trump is saying the US is going to blockade the Strait of Hormuz as well. So this is going to be a real test when the markets wakes up and trade tomorrow or a few hours later for Asia. Then this is going to show us which one is the real support. Okay, is it the yellow or is it the blue? If this holds, that means we're going to keep the blue box and measure. So assuming it is staying above the blue line, it is getting into this wedge. April 24th is the date I mentioned. Okay, this line over here is the bigger downtrend channel that started, I believe it's summer last year for the case of Hedera. Yeah, July. So this line is crossing the mini trend support line. So the confirmation has to come in. Is the bigger downtrend going to still apply a bigger force to the trade? Or is this more mild downtrend going to be the exit point from the bigger trend? Okay, we're getting close to that point. The coming week, we're likely going to get an answer because the volatility is going to increase. All right, what happened on the 5th and 6th of February indicated to us that it is not a surprise for the price to come back to retest the 0.077, meaning the bigger downtrend is still at play. If we look at what happened over here, okay, except these two candles that are very indicative, if we draw a line over here, what the past 2 weeks has been testing is this level of 0.087 roughly. Okay, that was the low, except those two, crazy candles. Okay, during late January and early February. This level was holding until today. Okay, you see these candles will never close below this line. Okay, all of them closed above this particular line over here. So today, if we close below this line, that means the tendency for it to come to challenge this blue T level is getting higher. Okay, so let's keep this line for a week, and when we come back, we'll see what's going to happen. Okay, some people will say, hey, isn't this a descending wedge? Would that be a bullish sign like the textbook says? That's a good proof. Okay, like I always mention, those candlestick patterns aren't 100% foolproof. Okay, you have to be careful when you put in your trade if you're basing on those textbook theories. Okay, always look at exceptions. Okay, we've got a wedge, but then it didn't go up like the textbook said. Then that gives you an answer. It's not 100% reliable. Okay, so while this may still go this way, hopefully it will, and find support over here, breaking the long-term downtrend. I already mentioned. Okay, look at what happened over here just 2 months ago. This is going to be a real test, whatever that's going to come in the next 2 to 3 days. Now, Casper, again, keep testing this particular support level of 0.003. Okay, let me, I'm trying to look at this one. Again, similar but different in the sense that because Casper has been exploring its all-time low. Okay, if we look at the chart, Okay, it has been going lower, lower, and lower. It is of a different situation compared to what I said to Hedera just now, because Hedera is still going through the stage that it hasn't reached its lowest point. So if the same test, what's happening in the Middle East, US blockading Strait of Hormuz, all that, it's going to drive Casper's price lower. That means likely the paper hands are mostly gone. Okay? That should be treated as a positive sign, even though we don't know how far or how high Casper price can get back to. Okay? Even if this downtrend is still going to continue. All right? It's still a good indication that no more paper hands are around. Okay, so of course we don't want to see the peak, ending somewhere around the orange T level. I hope it's better than that, right? But that's the cruel reality. We have to wait for the signal, the sign of strength to come back in, higher than average volume, and coming back to challenge the green T level of 0.235. And the condition I mentioned just now has shown up actually. If you look at the volume for Casper, it has been climbing. Okay, look at what happened from July to September last year compared to where we are now. The volume has actually climbed. And Casper's price since, okay, I want to enlarge it so you can see it clearer. Since this point, beginning of February, it hasn't really dropped. And the volume is actually pretty high on average compared to the previous months. So something is going on. Some whales may be gathering Casper, or small fishes as well. Quite a number of people have been trading around this point. Of course, here, where we're measuring, I said by April 7th, we'll get an answer. Because the price has been trading lower, lower, and lower, and the volume has come down as well. And at this point, we get the confirmation on that date that it is not following this downtrend. It is just doing sideways. Okay? Like what it did since the beginning of February. Within the range. Of course, the spike has pushed the range higher to this yellow resistance of 0.0042. But it still come back down to this 0.0028 level that this range of trading has set this support line, this short-term support. Okay, it is by far the current all-time low. And like I said, for the case of Casper, what's happening right now around the world is going to test this line one more time. If things that has got to this kind of crazy situation that energy is impacted, our food and fertilizer, and also the ingredients to make chips are impacted. So from food to energy to technology are all impacted. And it's still not driving the price of these assets lower. That's a big indication that the paper hands are mostly gone. Okay? Otherwise, people will sell all of this. So we'll get either one of the two confirmation. The paper hands are gone. This support holds. The second is that the paper hands are still there. And this is more or less like the final shakeout. And we will see the true bottom of this accumulation cycle very soon. Okay? But like I said, don't mix it up with whether the price will go back up. Okay? We are seeing the test, the ultimate test to the bottom. But it doesn't mean or imply the level it is going to bounce back up. Okay? That part is going to depend on when the world gets back to normal, to risk-on mode, which project is better positioned to capture the opportunities in that new world. Okay, that's a completely different dynamic. Now, XDC, the big picture is still early stage of accumulation, quite different from a couple of other altcoins. Volume has been climbing, okay, compared to this period. Same case, September, October last year. So let's expect more volatility. What we want to see is the automatic rally that's going to define the trading range start for the accumulation cycle. We don't know where would it end yet. Okay, look at what happened over here. After dipping to this point, the rally came to the red line, red key level 0.035. Currently, the price is trading below the purple key level, just one key level lower than the red, okay, 0.031 currently. And like I said earlier, the test coming in because of the Middle East situation, would it send the price back to test the levels back in 2022, meaning the blue key level of 0.026 all the way to the light blue key level of 0.022. Okay, those two blue levels over here. Okay, if you look at what happened in 2022, this is the test. Okay, tariff isn't bad enough. We have war. We have energy, technology, and food impact. And if you just look at what's happening in the aviation industry, all the rerouting that's happening, all the packed flights, because they used to take transit from the Middle East. Now those flights cannot do the transit over there. They are rerouting to other transit points. That's going to create a lot of stress in the aviation industry. And that's not only about passenger, they're goods as well. Okay? Now, micro view of XDC. It has exited the mega downtrend, okay? The over half year downtrend that started for the case of XDC is also late July. We are the second week into the breaking out from that downtrend, and currently the price is still staying above this yellow dash line, this I wouldn't say weak support, but at least from whatever happened on the 5th and the 6th. Okay? I've repeated these states a lot of times. So this 0.0295 level is going to be tested once again. Okay, look at what happened over here. That's a support point, support proof. Okay, and then resistance over here as well. Resistance over here. So even though it is not a key level, it's still relatively strong. If this breaks, the price is definitely going to come and test the 0.026. And like I said, okay, if you look at what happened in 2024 during the accumulation cycle, that's almost the lowest range, I would say. So be careful with the terminology here. When I say the lowest range, it doesn't mean it's the lowest price points that 2024 accumulation has got to. There were about 6 to 7 days that the price went lower than the 0.026. When I say the range, it's because most of the trading activities, the seeking of bottom, the exploration of the bottom of that cycle happened over here. You see the candlesticks over here. Okay, that's why I said that's the level. Okay, so if it comes back to test this, it shouldn't surprise us because 2024 isn't that far from where we are now. And the institutions has already factored in whatever interest rates changes, who's going to get elected, those kind of things they have calculated already. And that got us to that point back then. The difference now is that the world is more decoupled. And the situation in the Middle East has huge impact to the world. So this, or even this, may happen, okay, given, or depending on how bad it is. Plus, all those things that I already mentioned in the previous weeks, like the private credit crisis, all those, okay, everything aligns. If they happen all together, okay, that's where the potential gets to. Okay, let's hope they don't align. Okay, so if you're interested to access these sessions 2 days earlier, similar to other members, join the channel membership now. And remember, the Substack dashboards are still available for free. So go check it out. And SLS is the handle. See you in the next video. Thank you.